Hello, and welcome to Money Mystery No More. Insurance is a big subject. It is complicated and can be expensive. But for this video, let's zero in on one thing. Let's talk about insurance and what you must know to come out ahead. Listen for the part when we discuss the components of an insurance contract and also the average premiums by state so you can benefit with some good insights by keeping it simple. It's awesome. If you like this content, please hit like, click the subscribe and notification bell buttons to keep getting the latest and greatest information. Okay, let's remove the mystery. If you have ever bought or leased a vehicle, you already know that providing proof of insurance is required. Yes, it is true that you typically get a small window from the time you take the car off of the lot to the time you must provide proof of insurance. That window is known as a grace period. Each insurance policy is different, so make sure you understand any limitations and responsibilities. You may be allowed to drive it from the dealer to your residence, and that's it. Regardless, you are normally required to provide that proof of insurance in the next couple business days. Let's consider a few things. First, some dealers will not let you take the vehicle off of their lot without that specific vehicle being insured. In fact, my wife once got a little Mazda Miata on a weekend, and we were required to leave that vehicle overnight until we squared away the insurance. Thankfully, our provider was AAA. It got worked out pretty quickly on Monday. Back to the dealer we went, gave them our proof of insurance, and drove the car home. Second, the lender may require insurance prior to releasing funds to you or the seller. In some cases, just having active insurance will be enough, in line with a grace period. Other times, upgrading the insurance is needed because of the value of the newer car. They want coverage if something were to happen to it while in transit, like it getting stolen, damaged, or totaled. Not only that, your state law may have mandatory liability minimums. So between the lenders requiring certain comprehensive and collision coverage, the state also has laws to protect you and everyone else that might be in the path. Third, even if you have a grace period, you may have insufficient coverage for a newer, nicer, or more expensive car. Makes sense, right? Your current policy may only provide the same existing level of coverage in place on the older car, and it may be too low. Quite simply, the proper level of comprehensive and collision coverage needs to be in place before driving that newer vehicle. Fourth, and maybe more rare, but it does happen, the dealer and/or your lender may provide insurance on your behalf and charge it back to you. Warning, it's pricey. Are you seeing dollar signs? Yes, insurance will cost a chunk of money, maybe $50 to $200 more each month. Heck, maybe even more, depending on your age, where you live, and even the type of vehicle. Remember, that's on top of your new car payment. Seriously, this can be a game changer for lots of people who forget to factor insurance costs before buying. Literally, it can be a showstopper, like no vehicle, or it means swapping the desired vehicle completely to find a less expensive one with more affordable insurance. It's true, I remember shopping around cars with our niece some time ago. She did get her new car, her new used car. A couple of days later, she wanted to return it after discovering the high insurance cost was way more than what she had expected. Like we discussed in our previous video, buying a car on a budget, you really must remember to factor the cost of auto insurance. In fact, watch that video because you will get 5 strategies on buying the car with great ways to stay on budget. Then you can include what you learn here about auto insurance as well. Besides the grace period just discussed, you want to know flat out that you have options to choose from, the providers. That's good news. If you are willing to do a little digging, some research, you can save big bucks. Simply take some decent notes to stay organized and use them later to compare and choose. There are lots of companies selling auto insurance, and you've heard of many. Think of some big ones: State Farm, Allstate, Mercury, and Geico, for example. Some others you may not know so well, like Esurance, The General, 21st Century, or even Wawanisa. Finally, there are some great memberships that offer insurance too, with some big discounts and perks, like USAA and AAA Auto Club, for example. While not making any recommendations, it is interesting to point out Wawanisa. Quite a reputable company, they caught my eye years ago because they were ranked by J.D. Power and Associates as the highest among award-eligible insurers in the California region. Crazy enough, they are a Canadian-based company and definitely worth a look. My standard practice is to make a list of all the companies being researched. I like to record the contact agent, phone number, and minimum deductibles too, if available. Then of course you need to start digging into the components of the insurance. I did a simple Google search. What are mandatory elements of auto insurance? And I got a ton of information, including some average premiums by state, which we'll discuss shortly. So just stay with us here and save yourself some time by using the shared info. Let's start with mandatory coverage, which normally will include things such as bodily injury, property damage, medical payments, non-insured or underinsured motorist bodily injury, and uninsured motorist property injury. Also, keep in mind that new cars are almost always required to have collision and comp, also known as comprehensive, whereas a used car may not need it unless being financed. Then there are a few niceties to consider, if not already included. You'll get to figure out the cost and value of adding things in such as roadside coverage, towing allowances, rental, gas or battery recovery. They are not terribly expensive, but something to consider, especially if on a budget. On top of all that, there is that pesky but mandatory liability coverage to factor in. That includes bodily injury and/or death per person, bodily injury and/or death per accident, and property damage per accident. Don't worry, liability coverage is straightforward. It's there to handle the cost of an accident if you are the person at fault. Even if you are not at fault, some states do require no-fault insurance to cover the cost of any associated medical expenses incurred by you and any passengers during an accident. Depending on your liability limits and coverage, the claims that may follow will be covered, hopefully a full 100%. You might be wondering why all the fuss with having auto insurance. It may seem like a very large unnecessary expense because you are a safe driver, but the reality is things happen no matter how safe you are. So many states have mandated coverage and limits, frankly to protect everyone on the road or off the road if involved in an accident with the vehicle. Insurance covers the financial responsibility for damage caused by you, whether to yourself or to the victims of damages in an accident. Keep in mind that a victim can also include someone else's property. When the claims start coming in, you don't want to be personally responsible. Insurance will carry a chunk of that burden and maybe all of it. As we previously discussed, you might decide to add additional coverage options to further protect yourself and limit future potential costs, such as collision, which pays for damages to your vehicle if you cause an accident, or comprehensive, which pays for damages to your car when it's due to something other than an accident. Think about a fire, a flood, or even big hail balls. How about rental car coverage to help offset some car rental costs when your vehicle is at a shop for some covered claim? Or roadside assistance to help with items like gas, tire changes, or even a dead battery. And what if you lost your car as a complete loss? Maybe gap coverage would be a good thing. It helps pay what is still owed versus the vehicle's value. Cost and more cost, that's all you're likely hearing and maybe saying, never mind, to the heck with insurance. But before you do, be aware of the consequences of driving uninsured while keeping in mind the cost does vary from one state to another, as you'll see with the average premiums. If you drive a new vehicle without insurance, you will be held personally responsible, not just for damages, but probably any financial and legal risk too. This could include repairs to other vehicles, lawsuit expenses, medical expenses of any injured person, loss of wages, pain and suffering, and even property-related expenses to an individual or public entity. Potentially, we're talking about tens of thousands of dollars in expenses, which insurance may provide coverage for, and even some legal defense coverage. So yeah, get the coverage, and keep it current. Do not let it lapse. Not having coverage when you are required can cost you dramatically higher premiums later. The lapse may flag you as a high-risk driver since you were uninsured. The fallout could be non-standard coverage with poor benefits, or worse yet, state-assigned risk pools, which come with the gift of high rates and poor benefits. Adding insult to injury, there are insurers that will hit you with the surcharge and/or mandate a set period of continuous coverage to even be eligible for normal or standard rates again someday. Doesn't sound fun at all, right? It's the old, is it worth it battle. Some short-term pain, financial pain in this case, may be well worth it to avoid really long-term pain with little gain or absolutely no gain. Yes, the state you live in does matter. Some of the most expensive auto insurance is in Michigan and Louisiana, while Rhode Island, New York, and Florida round out the top 5. Surprisingly, the lowest 5 costly states are New Hampshire, Vermont, Maine, Ohio, and North Carolina. Seriously, it's crazy that North Carolina cost almost 3 times less than Michigan, based on some early 2025 figures. California may move into one of the top 5 pretty soon though, due to some liability limit changes in 2025. For the first time in 60 years, required liability limits are increasing twofold for bodily injury and tripling for property damage. All that to say, shopping around for insurance is smart and can be beneficial. What initially seems too expensive might very well be affordable. For me personally, Shopping around for my Honda and my wife's Mazda saved us $700 a year each between two reputable insurers. Yeah, nearly $2,000. Remember, don't be an uninsured motorist and pay bigger premiums in the future for up to 3 years. Get the insurance and hopefully appreciate the trade-off. Maybe no jail, no steep fines, and no losing your license. Honestly, it's not worth the risk in my opinion. On top of the potential hassles, you'll just end up paying way more in the long run. It's easier to get the insurance, which will help by keeping it simple and considering it a part of managing risk. In fact, you really might want to watch our video, Money Benefits of Risk Management, for a bigger conversation on money and risk control. If you find this content to be interesting, hit like, click that subscribe button below, and turn on notifications so you keep getting the latest and greatest information from Money Mystery No More. I'll see you in the next video.